The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And the number to call, as you just heard, 877-927-6648. Good day to call. What I'm looking at here is a rebound. There was a chance yesterday we'd get the rebound, but once the market decided that the news was in fact bad news, the economic news, and we started to take out minus 60 or more on the Dow, that just accelerated down. I'm looking at something a little different here. And I should have been patient because it was really obvious that it was likely to happen. I was not patient. So now I think we got exactly what I was looking for. In the Chapman wave methodology, this technique that I use is the arch formation. It's either a lowercase h, if you've come down sharply and then you have a bounce and then fail, or you can go all the way to a new high, but the whole pattern that you form, as I'm showing right here in the E-mini, the S&P March contract, futures contract, you can go to the top and make it kind of a rounding top and then come back down. If you do that, in either case, if you do that, when you take out the left side low, this case the low of the 16th of December at 1754, the very bar that takes you out to the downside has to reverse back up and close above. That's one particular technique. Or it has to do it within just one more bar. You've got like one more bar to get back. In this case, it means we're at 1747 up 1475. The request that I have here of the E-minis is to please consider this particular technique, because what it says is if you go above 1754 back into the arch formation, you do have a chance to test the most recent peak. Now, to say that we can go from where we are, 1747, when the tide is obviously turned in the daily and weekly charts to the downside, we're waiting on the monthly, although the Dow's already given a peak deconfirmation. To go all the way to 1800, 1801, that would be a mighty, mighty big rally under these conditions, that is. However, the VIX index has dropped considerably. It's down under 20, and that is an important factor that I was mentioning to my subscribers of my opening call. And now what I'm looking at is the rally that we've got in the 120-minute chart, extending leg C in quite a weak but very steady up move. Now, it's more important for me at this particular instance to be looking at a steady move to the upside rather than a suddenly explosive move to the upside that doesn't have the technical veracity. Now, I'm just going to follow through what I did on Friday, I think it was, when I was talking about the naked charts. Here's a naked chart. Actually, let me get rid of everything. Basically, what you have is just the candles. I didn't have to have candles. I could have had bars, but it's just a little easier to see visually because all I'm looking for are higher peaks and lower troughs. And from the low that was established just after 1 o'clock this morning, 1:20 at 1734, there's been a peak A, B, C, D in the 10-minute chart. You remember peak? Let me just articulate very quickly. In the Chapman wave methodology, what you look for is the most obvious. This is the easy way to do it. The most obvious left side, lowest low bar, and you merely start a count to the upside. When you get to the fourth highest peak, and I'll label them capital A, uppercase B, uppercase C, uppercase D. When you get to the D, that's where you're going to expect some kind of a pullback. It could be brief or it could be very sharp, but that's the area of greatest vulnerability. Well, what do? We go all the way to 1743.75 at 4:50 at 10 to 5 this morning Eastern Time. Peak D, very next bar is a lower high, and what does it do? The deepest plunge that it's had ever since the takeoff back at 1:20 this morning. And then it pulls back to where? It pulls back to 6:30 a.m., 1737.25, and then what does it do? It goes peak A, B, C, D, and what does it do at peak D? It has the deepest, longest consolidation. I shouldn't say longest in time, but the deepest consolidation. It goes from peak D at 1746.50 at 9:40 this morning to the low bar of 1738.75. Now, that 1738.75 starts another rally, which goes to a new recovery high. And now we're going to see whether that's E/A. Is it E or is it a brand new A? Pulls back, goes to another new high, recovery high that is, at 1748.75. Is this peak F or is it /B? Is it going to be B? Now I'm going to go back to what I had before. These are the lines that I had drawn, because a very simple trend line can give you a tremendous amount of information. The green one was the upper one, and that one I did a little bit arbitrarily. I just lifted it up and said, okay, if you break above this and close above this level, that's going to be very, very bullish. And this particular instance, we'd be talking about 1748.75. And we went right to the Chapman Wave inside track repellent sell zone, and it's pulled back from there, but there's no real signal to say sell. At the bottom, I had the red right here. I had the red inside track support channel line. And then I had, oops, wrong way around, sorry, right there. But then I had the green line, and that says anywhere above is very positive. So now what I've done is I've given you the Chapman Wave up channel with the inside track repellent sell zone and inside track propellant buy zone. And so far we've been trading in between that. Within that, you can still have another little channel on the most obvious number of hit bars of highs and lows right there and there. And now what we're looking at is, as long as the price, the S&P E-mini holds above 1745.30, well, it'll be 25 because it moves in quarter-cent increments, quarters, 25-cent increments. This is what we're looking at. And my suspicion is that we have run, let me just do this, VIX.X, and there it is. So A, B, C, D, A, B, B, C, D, E, F. And then it plunges down to trough A, B, C, D, and E. Yep, the VIX looks to me like it is done for, and the E-minis look like they're acting really well. One of the reasons why we went long, the 300% long S&P ETF this morning, is because there are very strong signs that key support levels were held. And those key support, well, I shouldn't say held, they were breached fractionally, but once you get there, it says this is the moment. DIA, went right to the 200-period exponential moving average of 150. I have to do this like that. Of 153.88. It went underneath to 153.25. This morning's low was 153.26, 1 penny above. That makes a trough. That's trough F. So this is the best place for risk reward of, say, a one. I'm going to make it even tighter if it gets to a certain point, but a 1 point stop on this particular ETF. And the reason being, if ever there was a chance to have a 1 to maybe 2.5 to 3 a rally, this is it. So I took my chances with subscribers, and we'll see what happens. Here's the other thing. If you're looking at the weekly Dow, INDU, you will see that the up channel support is way down at around about 14,700 to 14,600, 14,000. What's really important is that you've got three very strong downward candles, and if it does stop for a brief energizer for another move to the downside, because I will be looking to short again, as we had been last week in the short positions. Actually, we still have a short position that's doing okay. Then I'd be looking at a test at some point of the 14,719. But you remember what I was saying? 15,200 is kind of a very important, at least for me in my work, that's a very important support level. I just don't think we're going to get there right now. My belief right at this particular point is that that we have seen enough to the downside. There could be a little bit of weakness, but I'm talking about another triple-digit move to the downside. I don't think it's going to come just yet. There's going to be a fooler to the upside where everybody says, oh, man, now I got out of my positions, and now look what's going on. So I've got a couple of questions to answer. I hope to be able to do that now. I hope to do that soon. Email questions that I got about different things. Couple of quick questions here. In the den, we've got, are we below the 200 DMA on the diamonds? DMA, I'm not going to change anything right now. What I'm going to say is that in the daily chart, it's below the SMA, that's the smooth moving average, and the EMA, which puts, I love this one because it puts the greatest weight on the last closing price. And to me, that just gives you a real good sense of the construction, at least the way I look at it, of how you can use these moving averages to your best advantage. And now the other thing is the stochastic still at 8%. The on-balance volume is trying to rally. This is just an attempt to rally. I'm not sure that the 157.26 period exponential moving average, meaning we actually eliminate all the selling yesterday and we go to a new high above yesterday's 156.76 in the diamonds high. That's really asking a lot. But I do believe that there's a good chance to have a pretty decent bounce here. So that was the question. Now here's another question. I may as well just answer it. Have I done the numbers? The Dow's up 56 at 15,429. The S&P's up up 10 at 1751. The comp index is up 28 at 4,025. Gold is down 6. I just think gold has made a peak D. Here, let me just do this on the GLD. GLD made a peak D. And yeah, it's actually holding very well, but it is in a consolidation from the recent high of 122.51. And to me, that says sideways move. You need a little bit more sideways action in gold, and some of the stocks need to take a breather after such a fantastic move. The GCG14 has, in fact, pulled back, and that says to me there is a little bit of a hiatus that's needed. We've got bonds down 22 30 seconds. Copper is up a little bit, and the dollar's up a little bit. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let me just quickly get to these two questions. One was a question on Home Depot. And the question really was, I've been a long-term holder of Home Depot. Should I get out of the next bounce? What should I do? Should I take some off? Whereabout would you be looking for a bounce to go to? A bunch of things like that. Real good questions. And if you've been a very long-term holder of Home Depot, it's had a spectacular move. And the fact that it's at 74.46 right now, under the 200-period exponential moving average in the daily chart, having gone to a peak G, 82.57, and I think I mentioned it to subscribers. 82.57 with a 2-bar reversal of 82.47 high the next day with doji candles and a peak D in the weekly and a potential peak D in the monthly. I'm going to do two things. I'm going to talk to you about it as if your objective basically was met when it went from the 81.56 high back in, let me give you the exact date, 81.56 high back in May of 2013, 81.23 high, the fraction lower, back in July of 2013, and then in January it went to 82.57, a point higher, and now it's giving all that back. Now, what could happen is it goes down to the 73 to 72 level. And just like it held on the upside, it holds on the downside, and then it gives you a really good bounce. I could say to you, hey, get out of it right now at 74.48. The next thing you know, it goes to 72. And what does it do? It has a bounce to 78.50. Now, if you're a long-term holder, my suggestion is that you could get out right now at 74.47. Be prepared that it could still go to 72, but be prepared that it could bounce to 77 to 78 if there is a very strong bounce still to come before we go further down, number one. Number two is that the way it's looking in the monthly chart with the technicals, I'm suspicious of what's going on, and I suspect that Home Depot, HD, is going to trade down to the 68 to 66 level over the coming 6 weeks or so. If that's the case, wherever you get out at this particular point is great, at least on some of your position. Here's my thinking. If you're a long-term holder, 2 points doesn't make any difference whether you get out now or at 72 or you get out at 76 to 77. You are getting out some of your position. So here's my recommendation. You can do it today. You can do it any time in the next 3 to 5 days. I can't say I'm 100% sure, but I feel fairly confident that Home Depot will give a little bit of a bounce to give you a little bit of a better price. Remember, it's a long-term position, so don't fuss over 2 points. I'd rather you get out now at 74.44 on a part of your position than to have it go to 72 and then actually go to 68 without you getting out at all. So that's my recommendation. Just take some of it off. A long-term position, you've had a really good gain, whatever you got in at, because it should be lower down if it's a long-term position. So I'm saying take something off, and it's either here or yes, you can wait for a bounce of 2 points or so. That's not the issue. If you're a shorter-term trader, 2 points does make a difference. 2.5%, 3% does make a difference. Long-term, I don't care. Get some of your position out. The other thing I'm going to say is that if it does rally to over 70, if it rallies at all, and then it comes back and it takes out the low that is made between today and tomorrow, then you've got to consider even taking a little bit more of your position from your core holdings. I don't want you to change your core position, because if it's a longer term hold, you might be able to see 68, 66, and then a huge rally comes up in April or so. I just don't want to be messing around with your long-term position. I do want to say, in the intermediate term, I would be taking something off. Now, this goes to the next question. The question was, in my, how can I put, let me find it. Do I still think, and this goes to our callers who often call and they talk about their long-term positions, they're busy at work, they don't have a chance to do very much, and they respect those peak Ds in my monthly charts, and the real question is, are we still going to see a peak, a leg E to higher highs, higher all-time highs? Because if that's the case, that any longer-term position that you, if you're in your IRA or whatever positions they are, and they just core holdings that you've held for years, and you keep putting money to work, is this the time to stop putting money to work? Is this the time to be lightening up? I'll answer that question when we get back. I'll also go to Dan in North Reading, Mass. And the Dow now is up 65, S&P is up 975, and I'll be right back to answer those questions and to speak with Dan in North Reading.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back, and we're going to go straight to Dan North Reading because this pertains to chart patterns that we were looking at here. Hi, Dan. How are you?
Good. How you doing, Basil?
Very well, thank you. So
Yeah, I got a DXAJ Japan up there, and I was just kind of curious. I know it's too early to be looking at it for a long, but I'm just kind of wondering what you think looking out, like more long-term, if you think it's a long.
Well, it was mentioned to me in the den that the Nikkei looks very much like Home Depot, and I remember looking at the charts and saying, what is that chart that has that rectangle formation that's so familiar? And now I've got to say thank you, because that is the very similar charts, in fact. So what I'm looking at here, if you don't mind, you want to look at the DJX. The DJX is, in fact, WT Japan.
DXJ, actually.
I keep saying the wrong thing. It's the DXJ. DXJ, that's what I've got. I always go backwards on that one. And it is, in fact, the DXJ1, the WT Japan Hedged Equity Fund. I think that's what it's called, right?
Yeah. Yep.
Anyway, I'm going to show you this chart. For those of you who are looking at Tiger TV, the one on the left is the daily, the chart on the right, in the middle is the weekly, chart on the right is the monthly. But I'm going to put up the NK futures, the continuous contract. Remember, I'm going to do this real quickly. For you, those of you who are looking at Tiger TV, look at this chart. Right here in the middle is the Nikkei 225 USD continuous contract, and it made a high of 16,350 back in the week of the 24th of May. Now, a continuous contract will always have changing prices, so it's the date that is perfect, the chart is perfect, the price is obviously going to change when it gets smoothed out. Then it was slightly higher to 16,450 the week of the 3rd of January. Now, look at this. You've got that pattern, and all of a sudden I'm going to do this, and you've got a very similar pattern with the Home Depot chart. I just wanted to bring that up because it's one that I'd noticed before, but I couldn't remember which two were parallel. Now, thanks to Jan and the Dan, that clarified it. Now let's go back to the Nikkei. The Nikkei, I think, longer term, if the Nikkei is able to hold, I'm using the continuous contract, so it might be a few points off, but if it's able to hold on any pullback over the next month from now, and it is able to, if it breaks the low of August, I've got it at 13,330. That could be smoothed out a little bit, but that low, if it closes under it, it could go deeper, and it could go even to the low of June, which was at 12,640. So, but if Abe is going to keep the rates low, if he's going to do the same thing as we did, markets tend to mimic and mirror and parrot one another. So there's a chance that the Nikkei could have a rectangle formation, go down towards the low of 12,000, the low of the week of the 7th of June, 12,640. 12,100 to 12,000 is the 200-period exponential moving average key support. I'm not sure yet whether it's going all the way down, but all I can say is it's a bit early. If you want to play a bounce, it's the same kind of bounce that I'm playing, just a very quick few days that I'm expecting an upside move. Might be a little longer than people think if the volatility index keeps falling like this. But other than that, I think you're looking to buy Japan, correct?
Yeah, and then I was thinking of a longer-term position, so it's probably ways out to even assess whether that's a good idea, huh?
I think it is a little bit early to be looking, but definitely these are the numbers that I'd give you. To go to the futures, let me see if I can do it on the EWJ. I hope that's still notated. Yes, it is. If you use the EWJ just as a kind of a proxy, it's close but not exact. That's the iShares Japan Index Fund. I've got a target. It says 11.01. There, the 200-period moving average is at 1058. I'm suspicious of that. I think it's going to break the 1036 low of June the 7th. So in case I forget about it, whatever, I'm probably going to keep looking at it because it's on my list as longer-term potential buys. That's more intermediate term, but I too am looking at that, but only if certain factors are respected, and that is that the rectangle formation with the low in the EWJ of 10.36, I wouldn't say has to be respected, but you've got to bounce back into that level if you break under 10, and you've got to do it within 1 to 2 weeks of breaking it. So I'm watching it real closely. I'm just going to say to you, it would be highly risky, I think, at this particular time, other than as a shorter-term trade. I don't think that's what you're looking for. So let's go back to the NK. Oh, no. Let's look at the one you're looking at. The DJX. We'll go apples to apples. So the DXJ. Yeah. DXJ. Why do I keep saying DJX instead of DXJ? The DXJ, if it's at 45.10, if it starts to break 43.75, give me a call on this. We'll look at it together. If it's still looking very weak in the weekly chart, because the monthly chart, stochastic, is very poor. The MACD is still okay, but the daily and weekly are very poor. If it takes it out decisively, then I'd be looking for the low of 42, round number low, 42, the week of the 7th of June. That's going to be key, because between that and 40.95, the 200-period moving average, somewhere in there, we should get a really good sense of whether or not that's the time to start a position, and then you can add to it on rising price, not on lowered price. So let's keep that in mind.
Okay.
And I'm going to write down
Basil.
here in very big bold letters, DX. I even just wrote it wrong. DXJ. I don't know why. I must have something on my mind about the DJ something.
I use Thinkorswim, and DJX is the Dow.
Okay. All right. So I'm going to put down here DXJ Nikkei. I've got it down. Thank you. Thanks for calling. Remind me to look at this again if it pulls back.
Okay. Thanks, Basil.
Thank you. So let's do the other thing that I was going to say. Okay, so that was the one thing was the Home Depot. The other is, what do I do about my longer-term investments when I would prefer not to see another 5, 7, 12% if there's going to be another move to the downside, a deeper move? And I have to tell you, I'm looking at my monthly charts. Let me just go through. Look, GE is in peak E in the monthly chart. It's already confirmed peak E. Very important stock. IBM, retracement rally failure. The H goes to an M pattern, made a peak E at 215.90. The flat base restart, saw the bounce back into the arch formation. That at the low of 172. Oh, it's already been taken out. 172.57 is taken out. Today's low is 152.55. It's just been taken out. That's not a... If the triple M are high of peak E confirmed in the daily, see, peak E says to me, that's not like a D still going to an E. Peak E says, I either am going to have such a pullback, we're going to get a brand new buy mode from much lower down, and that could go on for a while, or it's saying, put together with UTX, the other one of my Dow Quartet, which is only in leg E, not yet peak E. We have to wait the whole of February. I'm going to make the suggestion that for those of you who have longer-term positions, that you do, I mentioned this actually a couple of weeks ago, quite a few weeks ago, but I'm going to suggest that you do take a little bit off, maybe take a third out of your full position. Just lighten up on any rally that's coming here. I think you can lighten up, and I'll tell you why. Because if you lighten up, there are sectors that are that have had spectacular moves that might be done for now. And there are other sectors like the aluminum and steels that are showing some kind of a basing format. If I'm correct that that's happening, that would say in the next 6 weeks or so, you might get a fabulous buy on one of the sectors that was beaten down and could become a leading sector, especially if the automobile industry is going to start to come back strongly. The American, I'm going to emphasize, the American automobile industry is going to come on strong, because then you're going to see the aluminum and steel stocks get the benefit of the doubt. So that's what I'm looking at, and there will be sectors to play with that one-third that you take off. So you don't have to do it today, but I'm saying in this particular phase over the next 3 to 5 sessions, any good bounce, I'd start looking to take something off because you want to be able to put that back. Now the big question is this going to be a pullback of such magnitude that you may as well have taken off everything and restart, or is it worth keeping something on, even though that amount of money will be losing if there's a 22% correction? And my answer there is that I believe we can do it in different stages. For instance, if there's a bounce in the Dow goes to 15,600s, and then all of a sudden I'm looking at weakness, that might be a point where I say, okay, now you can take a little bit more off. If I'm looking at a bounce that is starting to include some of the sectors that say rotational correction could keep tremendous support so that there's no more than a 12 to 15% correction, then I've got to look at it a little bit differently. So as of now, what I'm saying is I do believe you should be taking something off your portfolios if you've got longer-term positions. Let's go to Dan in Baskin Ridge, New Jersey. Hi, Dan. How are you?
Hi, Basil. Doing well.
Good.
Just getting out a small amount of snowfall, but we're doing well.
Oh, okay. We had it last night, and it's actually now looking quite good.
Okay. So I was just touching base out. We had spoken a while ago on Great Panther.
Yes.
I had gotten stopped out at 78.
That's GPL, right?
Yes, Gorilla Paul Larry.
Okay, got it right here. Trading at 81 cents. Yes. So you were in the position, and you got stopped, and you got stopped out.
Stopped out. I took another position, made a few cents on that, and I took a third position in at 82. Either way, I'm still up at least 10 cents in the position.
Okay. So this is what I'm looking, folks. I just want to explain a couple of chart patterns that I look at based on the Chapman Wave methodology. The pattern from this GPL, Great Panther Silver, which was once trading at 14 cents back in October of 2008, in the monthly chart went to peak A, B, C, D, then went sideways, and then had this unbelievable move that went from the dollar level to $5.04, the all-time high, not the all-time high, let me just see. Yep, the all-time high back in 2011, in March of 2011. Then it comes down, and the pattern that I was talking about was the uppercase A, goes the Eiffel Tower pattern, I call it straight up, and then straight down. And that's pretty much what it did. It went from 0.65 in the last run, that was in June of 2013, to 1.34 August of 2013, straight up, A pattern, comes straight down, but this time it's held above the 0.65 level. It went to 0.66. Sounds like only a penny, but that's very important in this particular pattern because it has the principle of the H pattern, or the dreaded H pattern. If it holds the left side, it says it can rally, and it should rally to the left side high bar of most importance, and that would be 0.94 back in October, the week of the 25th of October, 2013. When it ran up to 0.93, and that was 1 penny under that particular high, and it is in peak C. Now the big question is, what in the technicals gives it the torque, the turbocharge to be able to go from 0.81, doesn't sound like much, but folks, 0.81 to 0.85, no, 0.93, it would have to go to 0.94, to 0.94 for leg D, is in fact 12 cents. That's about 14%.
Yeah.
So that's a big move. So as I'm looking at it now, the technicals on the daily haven't gone to a peak E. Let me just show you here. So that was peak A, B, C, D, goes to peak E, fails to get to the 200-period moving average, goes to 0.93. That was at 9.5, and now it's at 9.4, the 200-period moving average. There's an H pattern that's so far successful. Here's what I'm looking at. If in the next 3 sessions, GPL, Great Panther Silver trading at 81 cents, up 3 cents, does not take out 0.75. When I say take out, it means it goes to 0.74. It doesn't have to close. It just has to go under it, because that'll mean one thing. If it closes below it, that means another. If it goes underneath it and then bounces very strongly, that means something else. And I'll go through those different positions in a moment. Meantime, you back long at 0.82, and it's at 8.81. I don't want to see you go. I don't want to see it break under 70.79. So I'll be back and we'll discuss what can happen. Dow's up 86. S&P's up 13. We'll be back with Dan in Baskin Ridge straight after this break.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. I just want to go through a couple of things, and I want to, we're going to finish up with Dan right now. Dan, I'm going to make it real easy. If GPL takes I know it has little whippy moves every day. It's actually a big percentage move every day. But if it closes under 0.79, I would tighten up a stop on this particular baby. Why? Because there's a good chance that it's going to take out the 0.75. If it takes out 0.75, that'll be a big disappointment of the weekly chart, because it'll be towards the end of the week. It'll have to be a spectacular move on Friday to spiral up into to start getting close to making a leg D. But what you really want to see, nice action today. If it can close either today or tomorrow above 0.83 without hitting that, what did I say, 0.79-ish area, that's going to be nice action. It says the H can go to an M, and because it's successful so far, it can go higher than the 0.86 area. It could start to tackle the turnaround leg E bar of the 24th. So those are the parameters. But near term, it's acting quite well because it's come off the bottom. It's trying to get close to the 200 EMA. It's the weekly chart that is so important. if this thing can finally break into the 87, 88 area, that weekly chart will improve. But I wouldn't mess around if it starts to pull back here just because of that H pattern. Hope that helps you.
Just for a quick point on that.
Yes.
Do you think that these metals will be able to be resilient in face of any other downturns coming up?
I have the gold contract making an H pattern that can go to an M pattern. I think this is just a counter-trend rally. At this particular point, I'm suspecting that gold is going to go much lower in the coming, over the summer, I'd say.
I understand. Thank you, Basil.
Thank you very much for calling. I appreciate that. So I had a quick question here. EL is Estee Lauder. It's made a leg D in the monthly, a peak F, very sharp in the weekly. EL's the symbol trading at up 59 cents, 68.67, and it made a number of peak Ds. When I did this during the break, those of you in the den, look how many times it went to peak D and pulled back, peak D and pulled back again. So I'm looking at this and I'm saying to myself, I'm looking at this and saying it is probably going to be going much lower over the coming weeks. If Estee Lauder comes up and there's a surprise like Coors and there's a pop, it's at 68. I'm not sure it's going to pop to 77 to make all-time highs. I suspect that if it does have a pop towards the 71.5 to 72 3/4 area, if it starts to make an H pattern and turn down, I'd probably be looking at that to short. But if it just drops immediately, that's saying, uh-oh, any big rebound after this that comes along makes EL a short. Actually, the way I'm looking at it, the best is a high-level consolidation, Estee Lauder Cosmetics. I'm suspecting that it's going to go through a little difficult period right now, but I don't see it. It's at 68. 64 is good support. So it's more a shorter term, but intermediate term, if it takes out that 64 support, there's not much support going all the way down to the 58 level. So I'm watching this one closely. What was the other thing that UNG. I still have leg D to come in UNG. It's at 25.92. This is the U.S. gas, natural gas ETF, and I think it'll go above 27.05 to make that leg D over the next few days. That will be interesting. So let's just do this quickly. The Dow is up a little bit. Yeah, the Dow is up 86. I'm suspecting that the Dow, based on the charts that I'm looking at, could get, in fact, into 15,538 to 15,618. If it takes out that level by Friday, then there's a good chance the 15,759 level, the 9-period moving average, is going to be touched. I suspect that a majority of the selling just for this phase is done. There has to be a bounce before we can go down further. So, thanks for being here, and keep watching that VIX. It's back at the 18s, and that's very important. I'll be back with Tom at 4:20 this afternoon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.